Todd, thank you so much for joining us today. All right, I want to start out big picture with you, get your broad-based perspective on not just so much just today's market action, because obviously we are seeing a pullback, but in the context of that historic rally that we had yesterday, it felt like there was this, not just a sigh of relief across the market, but just a little bit of optimism. Maybe there had been too much pessimism baked in, but also that came on the strength initially of a tweet and then a post on Truth Social. So how do you take that all into context of today's market action compared to historic moves that you've seen?
Yeah, I mean, we're a very risk-off environment a few days ago, as recent as yesterday afternoon, and the traffic that we're seeing at our platform, ETF database, certainly reflected that. We saw a spike in the interest in gold-related ETFs. We saw a spike in the interest in real estate ETFs. We saw a spike again in those inverse ETFs, those that are betting against the market. You were just talking about semiconductors. The Direxion lineup of inverse ETFs was very popular on our platform at ETF database because of that. So yesterday we saw that relief rally, as it now feels like there's a pause, and feels like is it perhaps the key phrase there. The market's giving back some of those gains. Hopefully we return to a more normal economic environment. We'll see if that's the case, and thus quality stocks tend to do relatively well in the kind of environment that we expect we're going to be in.
So it's so interesting that you say to a more normal environment. We're seeing that in terms of the price action in bonds. Equities is still a little unclear if we're returning to a more normal environment. You know, I mean, obviously it's not as a big move today. We're not seeing the volatility according to the VIX that we saw yesterday, for instance. But talk to me a little bit more about the gold move. Makes sense to me, and we're even seeing that play out in terms of the gold price action today. But the real estate, how do we interpret the interest there? Yeah,
so real estate ETFs or that own companies that are REITs that are domestically focused, so they're not necessarily impacted by the tariffs. ETFs like Vanguard's VNQ is an example of that. XLRE is the State Street product. Those are the two larger of those products. But also, if interest rates come down, then we could see folks refinance. And that could be a stability opportunity for the real estate market. So real estate tends to be one of those more defensive sectors in the U.S. economy, less exposed to trade. People own houses and apartments in the United States. Most of that is based there. And then we're seeing, that's a form of quality. And so we are seeing stronger interest in quality-related ETFs. So an ETF like VFlow, which is the Victory Shares Free Cash Flow ETF, stable financials, companies that have stability but also a growth tilt to it. And VFlow has been one of the more popular products the last couple of years. We think it's one ETF to focus on.
Okay, so let me ask you in terms of how sentiment has been shifting. Have you noticed an increase in, not just demand, but traffic towards these ETFs in particular?
Yeah, so the volume in ETFs has been quite high. We had record volumes. I think SPY hit a record volume. SPY, which is the S&P 500 ETF from State Street, really strong volume. And then certainly on our platform, ETF database, we find that when there's volatility in the markets, people want to do additional homework, and they want to find an area of the market that they hadn't recently been looking into. So they knew very much about artificial intelligence ETFs. They knew very much about technology ETFs. But to learn about gold, to learn about real estate, to learn about inverse ETFs, they came to ETF database to learn more about that. So that's a great sign from an education standpoint.
Okay, that is a good sign from an education standpoint. Let me ask you about this in terms of we've seen an increase in more actively managed ETFs. What are you noticing about the trends there and the appetite there? Yeah,
so it's really strong. The demand for actively managed ETFs has again punching above their weight in terms of the flows. We just hit $1 trillion, or we crossed it. We may have fallen below it with the market volatility, but crossed $1 trillion in U.S. listed active ETFs. And we're seeing some of those leading firms people are familiar with. T. Rowe Price, for example, they have an active fixed income ETF. The ticker is TAGG. It's a tilt on the aggregate bond index, but with an active standpoint. It's seen its asset base skyrocket in 2025. So firms like T. Rowe Price, Capital Group, Neuberger Berman, these are firms that are bringing their best and brightest into the ETF marketplace. which is a great sign for investors.
What are you noticing about patterns in quality growth ETFs?
So there's a difference between them. So I mentioned VFlow, which is more of a value tilt towards quality and growth. But there's another ETF we've been talking about with clients. It's from American Century. The ticker is QGROW. It's a quality growth ETF that combines those factors of quality and growth with some proprietary metrics. Companies with strong balance sheets, so it has exposure to technology. It's roughly 30% of the portfolio, but higher quality technology companies that can withstand the volatility in the market, or better withstand the volatility in the marketplace. We've seen that ETF be among the more popular ones on our platform as well.
And I want to ask you just to finish on kind of circle back to how we shape this conversation, just a quick thought on, have we just kicked the can down the road with the 90-day pause? And, could we see more of what we've just seen?
We're certainly going to see volatility. I think the administration is acting and then reacting more than investors might have expected coming into the year. So it is important to have diversified portfolios. It's important to not just own large cap growth, but other asset classes. If the last few days have made investors nervous, this is a lesson to diversify your portfolio so the next time you're better prepared.
Okay, Todd, thank you so much. That's Todd Rosenbluth, head of research, Vetify.